Hello friends, a very warm welcome to my channel. In this video, we are going to do the analysis of a mid-cap auto ancillary company which is a market leader in the manufacturing of automobile cables, which is Suprajit Engineering. Again, we have chosen a new sector this time for analysis, and this company also has been a consistent compounder of wealth for many investors. If you are new to my channel, please do subscribe and hit the bell icon, and you can join me or follow me on different social media handles as well. Let's get started. Suprajit Engineering is one of the leaders globally in the manufacture of automotive cables, and they are also into manufacture of halogen lights which are used in headlights of two-wheelers and four-wheelers, and in that also they are in one of the leading positions. In terms of capacity, it manufactures more than 300 million cables and 80 plus million bulbs in a year, and their manufacturing operations are IATF certified. The lot of OEMs, the big brands, as we see in the coming slides, are working with them because they maintain consistent quality, they do testing of their products, and their manufacturing standards meet the global standards. They have vertical integration of different processes which gives them operating efficiency. They are preferred supplier for world's leading automotive brands, and they have exports to more than 50 countries. They operate three brands for three segments. First one is Suprajit, which is for automotive cables. For non-automotive cables, their brand is Vescon, and Phoenix is a brand for the lamps. Let's discuss about the management. Mr. Ajit Rai is the founder chairman of the company. He is the Master of Science in Industrial Engineering from Canada. He has more than 37 years of experience working in this industry. He has built this company from scratch and made it a global player. And he is a member of various organizations as well. Let's understand the brief history and milestones of the company. This company started in 1985, and during the 10 years from 1985 to 1995, they established two cable manufacturing plants in Bangalore. And during the phase from 1996 to 2005, they acquired a company which was their competitor, which was Shah Concabs, and they also got listed on NSE and BSE. During this period, which is from 1996 to 2005, it became India's leader in cable manufacturing. During 2006 to 2010 period, they again made several acquisitions. Few of them were CTP Gills, which was later renamed as Suprajit Europe, and they also established new plants in Patnagar, Haridwar, Manesar and Bangalore. During the period from 2011 to 21, that is up to date, they acquired another company which is Speedo Cable, which is a business of Precol, and they also acquired Phoenix Lamps Limited and Vescon Controls USA. So during this period in the last decade, they ventured into the lighting business as well as a non-automotive cable business by this acquisition, and now they further intend to do a capex of 100 to 125 crores in the coming few months. This is the organization structure of this company. Under Suprajit Engineering, they do domestic cable manufacturing. They have 12 plants in India. And in Suprajit Engineering non-automotive division, they have a brand which is Vescon. And they have one export-oriented unit under this non-automotive cables category. In Suprajit Engineering Automotive, they have one export-oriented unit to do the exports. And under this, they have Suprajit USA as well as Suprajit Europe. Under the Phoenix Lamps division, they do the lighting business. In that, they have two manufacturing plants, and also they have an export manufacturing facility. Other than these manufacturing facilities, they also have technology centers as well as their CSR initiative, which is Suprajit Foundation. Now, before we start talking about the business of the company, let's talk about the industry. The Indian auto ancillary industry contributes about 2.3% of the GDP of India. It has a major chunk of contribution towards the GDP. The automotive industry in India as well as exports is able to reach a size of about $200 billion and $80 billion of exports by 2026. And the global cable manufacturing market is estimated to surpass about $6.5 billion by 2026. There is a rise in demand of the safety systems in the automotive sector, and certain initiatives like Make in India by the government are generating a lot of opportunities for the people who are manufacturers in this industry. One more trend which you can observe is in the headlight segment, people are moving towards the LED lights from the halogen lights. But still, that is a very small chunk of the market, as people are very cost sensitive in India, and the LED lights are fixed down to only the high-end vehicles, and majority of the vehicles sold in India are the low-end or the economical vehicles. So in the economical vehicles range, most of the lights used even today are the halogen lights, which is a prime manufacturing product in the lighting segment of Suprajit Engineering. But as and when the market grows of LED, Suprajit has that technology and leadership to gradually move into the LED light segment as well. Over a period of time during 1985 to 2021, how the company has de-risked itself can be clearly understood from this slide. Earlier, it started as a single segment company manufacturing only products for two-wheelers. Then later, they started manufacturing for two and three-wheelers, and also they started catering to the aftermarket sales. They started covering passenger as well as commercial vehicles. That's how they entered into the multiple segments. When the company started, it was only catering to one customer, which is TVS Motors, and later they added new customers like Bajaj, Honda, Yamaha, Tata Motors, BMW, which are several national as well as international OEMs. When they started with a single product, which was mechanical control cables, and later they diversified into various products like speedometers, lights, cable-based levers and assemblies. When they started as a single location company based in Karnataka, and later they diversified and set up manufacturing plants into Maharashtra, Gujarat, Haryana, Rajasthan and various other places in India, as well as international manufacturing facilities. They have also acquired companies in various other geographies other than India. Initially, when the company started, they started with a single brand, which was Suprajit, and later they have started selling products in three brands, which is Suprajit, Phoenix and Westcon, and now all the three brands are quite popular across the globe. In terms of manufacturing facilities, if you see in India, they have about 18 manufacturing plants, US they have one, and Mexico they have one. Out of these, Phoenix has, which is the lighting segment, has about 2 plants, and 1 plant is in Chennai. For Suprajit, India is the headquarters and the global manufacturing hub. And under the cable manufacturing segment, they have 15 manufacturing plants out of 18. Let's talk about more about the business of the company and the products which this company manufactures. Their product segment, broadly we can classify as motion control solutions, vehicle lighting, independent aftermarket sales and clusters and speedometers. I will explain all this in a simple language. Under motion control, they manufacture the cable and other related products which help in the movement of vehicles. A few of the products which I can name here is push and pull assemblies, brake cable and lever systems, rotary push lever control systems, and several other products. And the photos of these products you can see on the slide. Under the vehicle lighting, they manufacture halogen lamps as well as auxiliary lamps, which can be easily understood from the photos which are there on the screen. Then, apart from manufacturing the products and selling to the OEMs, now the company is also selling in the after sales market. So whenever the vehicles are damaged, they come for repair. There are several retailers or distributors who sell the spare parts individually. So when the mechanics buy the parts individually and fix it on the vehicles for repair, it's called aftermarket sales. So in the aftermarket sales segment also, Suprajit is quite active and they are generating quite a good number of sales. As we discuss in the coming slides, you will get to know the segment-wise sales also. The next category of product they manufacture are the speedometers, and slowly in this category also they are becoming a dominant player, and for this they have a manufacturing unit in Bangalore. Segment-wise, if you see their revenue, over a period of time in 2001 to 2, they were generating maximum revenue, which is 96% from the two-wheeler segment. Slowly this got diversified and became 64% from two-wheelers and aftermarket sales 6% and 26% from other automotive segments. This share further changed in 2020-21, and now you see that the sales is evenly distributed across all segments, and they generate about 17% from the automotive segment, 35% from the two-wheelers, 21% from the non-automotive, and 27% from the aftermarket sales. Geography wise also, if you see, earlier when they started, 99% of the sales were domestic, and now in FY21, 40% sales are global sales, which is from exports, and about 60% are domestic sales. So over a period of time, the company has diversified into various segments, and geography wise also it has diversified. In terms of capacity, if you see, their capacities of production have been steadily increasing from 2010 to 21, and now they have over 300 million pieces capacity in the cables and 110 million capacity in the bulb segment. Revenue wise, if you see, bulbs contribute about 20% of the revenue, and 80% of the revenue is still contributed by the cables. Slowly as they get dominance in the bulb industry, the share of revenue from the bulbs may go on increasing. Brand wise, the company has 3 brands to sell their products. First one is Suprajit, second one is Phoenix, and third one is Westcon. So in the first brand, which is Suprajit, they are selling automotive cables. And in this, they have about 14 manufacturing facilities, and in this particular segment, they have 35 years of experience. The second brand in which they sell their lighting products is Phoenix. In this, they have 3 manufacturing facilities and about 30 years of experience. In Westcon Controls, they sell non-automotive products. In all the 3 divisions, They have developed latest technologies over a period of time, and they have also done several inorganic acquisitions to grow these three segments. Now, when we talk about their knowledge centers, they have three knowledge centers, one in USA, one in UK, and the third one is in India. In their range of cables, these are the several categories or products of cables which they manufacture in this segment. When several such awards are received by Suprajit, you can understand their credibility in the national and international markets. Now, let's talk about their top customers. All the big OEMs or automotive brands in India and abroad are Suprajit's clients. TVS Motors, Hero Motors, Bajaj, Honda, Volkswagen, BMW, all the big names as you can see on the screen. In the automotive customers, you have Tata, BMW, Ford, Suzuki, Mahindra, and in the non-automotive segment, you have Whirlpool, you have L&T, Godrej, GE. In the two-wheeler segment, all the top two-wheeler manufacturers like Bajaj, Hero, TVS, Honda, Yamaha, all of these customers work with Suprajit for their products. And one thing you should keep in mind that when these companies work with Suprajit, they are quite particular about the quality of the products they supply. And once the clients starts buying them, then the client stickiness is very high. So they generally don't change vendors quite often. Now let's talk about the competitive landscape. Suprajit is competing with companies like Remsons Industries, Comax, ACEY Engineering, and Samyong Cables in the cables division. In the lighting division, it competes with Lumax, Varroc Engineering, Uno Minda, FIAM Industries, Autolite Limited. So although there is competition in this segment, but Suprajit continues to maintain its leadership and its quality and relationship with the customers. In terms of market share, if you see, Suprajit has about 30 to 35% market share in the automotive segments when it comes to cables. And if you specifically talk about the two-wheeler cable segment, it has a dominant market share of about 60 to 65%. If we include the non-automotive segment also, it has a market share of about 40 to 45%. What are the competitive advantage or economic moat of this company? Suprajit has been a value for money supplier. They have maintained consistent quality and provided products at economical prices. They have leadership across the industry. They have designing and manufacturing in-house. They have an experienced team of people working with them for many years, and they have 13 patents, global patents. They have more than 35 years of experience in this industry, and over a period of time, as we have seen, they have de-risked their business in terms of geography as well as in terms of different product segments. And over the period, so many years, they have been profitable as well as they have been generating positive cash flows along with growing consistently. They have shown organic as well as inorganic growth, and they have state-of-art manufacturing facilities. They have 100% export-oriented units also among the plants which they manufacture, and gradually they have done vertical integration along their products so that their dependency on outside vendors for the raw materials is less, and they are more operationally efficient and generate higher margins. What are the growth prospects of this company in the future? They are expanding into the non-automotive segments, and slowly you will see this contribution become higher in their total revenue. They have planned a capex of about 125 crores in the next few months. They are continuously developing in-house technologies and diversifying into latest products. They have also done inorganic acquisitions, and they will continue to do so. One of the acquisitions which they have done recently is of Kongsberg Automotive ASA. There has been a 40 to 60% jump in their global business recently, so they are generating higher revenues from export business. So as their export business grows, they will have several tie-ups with global OEM brands. Since this company has leadership across the products in this category, it is easy for them to develop newer products and to start cross-selling. So they can use the same distribution channel, and as and when they develop new products, they can easily get revenue, which is not easy for a new entrant in this category. What are the risks which the company might face? This is a cyclical industry. If there is any issue due to which the automotive industry is not performing, there will be a direct impact on the auto ancillary industries. So this is something which has to be kept in mind, and while you invest in companies in the auto ancillary sector. The political and economic environment impacts the auto industry. The situations like chip shortages, which affect the manufacturing of the automobiles, directly impact the auto ancillary industries as well. As the commodity prices rise due to inflation, the margins of these companies will contrast. There could be several supply chain issues like the container shortages, which can impact such companies. Since this company is a global company, it competes with players across the globe, so there will be stiff competition, and they have to keep updated with the latest technologies which the OEMs expect. Otherwise, if the technology becomes obsolete, people will not expect to buy from them. Now, after an in-depth business analysis and industry analysis, let's talk about the financial analysis. Starting with the quarterly numbers, in Q2 FY22, they did a revenue of about 494 crores compared to 443 crores in the previous year. EBITDA has gone up from 73 to 80 crores and profit after tax from 48 to 50 crores. So margin wise, if you see EBITDA level as well as the profit after tax levels, the margins are similar, which is somewhere around 16 to 17% at the EBITDA level, as around 11% in the net profit level. Comparing the yearly numbers, in the last 5 years, the revenue has gone up from about 1200 crores to 1641 crores, which is growing at a CAGR of about 12%. Talking about EBITDA, it has gone up from 204 crores to 237 crores. So although the revenue is growing, the company is experiencing some margin pressure. That is why the EBITDA has not risen as good as the revenue. It has grown at a CAGR of roughly about 4%. EBITDA margin has gone down from 17% to 14%, which can be seen in the absolute figures of EBITDA. Profit after tax is fairly remaining at the same range, which is about 100 to 150 crores, and it has grown at about 5.83% CAGR in the last 5 years. Profit after tax margin has gone down from about 9.5 to 10% to around 6 to 8% recently. This can be seen in the bottom line absolute figures as well, as they are not growing in spite of the revenue. Share capital is constant at 14 crores. Reserves have steadily gone up from 500 to about 976 crores in the last 5 years, as the company is consistently making profits as well as generating free cash flows. Borrowings are fairly constant. Although there is a debt of about 346 crores on the balance sheet, the debt equity ratio is 0.3, which is fairly within the limit, and going further, the company can become debt free. Trade payables are within the range. There are no abnormal movements in trade payables. Fixed assets have gone up from about 550 crores to about 600 to 615 crores in the last couple of years. Inventory is at the normal level. There are no abnormal movements or sudden rise in the inventory levels. Trade receivables also are in the normal range. There are no sudden increases in trade receivables, and the debtor days are fairly constant. They have about 2 to 2.5 months of credit given to the debtors. Cash equivalents are quite stable. The company has a strong liquidity position. They have about 94 crores of cash on their balance sheet. Operating cash flows are always positive. They have generated about 161 crores of operating cash flows in FY21. Free cash flows have also been always positive, and they have generated about 136 crores of free cash flows in FY21. So liquidity wise, the company is doing well. Profitability is also well. Just because of the commodity prices, the company has been feeling margin pressures. ROE is about 15%, ROC is 16.6. So the return ratios are also quite well, as they are above 15%. Dividend yield is 0.40. It's been a dividend paying company. Remuneration to executive directors is about 7 crores, and the auditors are one of the big four firms, which is SR Bartley Boy and Associates. Let's talk about the shareholding pattern. The promoters hold about 44% stake in the company. Normally we expect them to hold about 50 or above, but 44 is also a decent number. FIIs hold about 6%, DI is about 14%, and public about 35% in the company. There is no pledge. Coming to the valuations part, the last trade price was somewhere around 435, 52-week high and low is 478 to 196. So in the last 1 year, the company has generated about 105% return for their shareholders, and on average in the last 3 years is about 29%, and 5 years is about 18%. The shareholders of this company are quite happy with the returns the stock is generating. The median P in the last 5 years is about 25, and the market cap is somewhere around 6,000 crores. So it's a mid-cap company. Face value is 1, it's not 10, and the EPS is about 14.5, which makes the PE ratio to about 31. If you see the peers which are in the same industry and of a similar size, they have a PE in the range of about 20 to 40. Book value is 73, so PB ratio comes to about 5.95, which is around 6 times, and market cap to sales is about 3 times. So valuation wise, it is slightly expensive, but if you keep tracking this company, when there is a down cycle and you get this stock at a very decent range, it could be a good choice for you to get into it. Let's see the price chart. The stock can have a support at about 392 rupees. So that could be a level which is around their 100 days exponential moving average. So this could be a level where you can start accumulating stock if you are satisfied with the fundamentals of the company, and if you like the way the company is growing and generating free cash flows. So this is about Suprajit Engineering. I hope you like the exhaustive analysis about the business, about the industry, and the financial analysis and the valuations which we have discussed. To summarize, the management is quite strong. They have so much experience in this business that they can continue their leadership, as well as they can easily expand to more product categories. The company has leadership across the globe in the products which they manufacture. They have state-of-the-art manufacturing capacities and facilities, and they can maintain consistent quality so that to retain their customers, they are experts in the products which they manufacture and they develop and keep working on newer technologies, and they have their knowledge centers established for that. They have 3 strong brands for which they have very good advantage across the globe, and customers remain with them as they maintain consistent quality, and all the global big brands are their customers. They are consistent in the growth over a period of time, and now they are diversifying into different geographies as well as different product segments. They are innovating, and as the EV space develops, they may also manufacture several products which are for the electric vehicles as such. Financials are very strong. They have been fundamentally strong. Growth wise, as the industry is a little cyclic, there may be few average performing years as well as there may be some outperforming years, and sometimes there may be pressures on the margins. So keeping those factors in mind, if you enter the stock at the right time, it could generate decent returns for you. So thank you for watching this video, and if you like the video, hit the like button and subscribe the channel, and you can leave the name of your favorite stock in the comment below. I will surely consider one of those names in the upcoming video. So thank you for watching and have a wonderful day.